Hey everyone, it's your boy Jeremy Alexander Newsome with your newest real-life stock review presented here from the Sequoia National Forest in California. Thanks so much for watching, and traders all around the world, you rock. Hey traders from around the world, what's going on? It's your boy Jeremy Alexander Newsome back with some stock market updates, information, knowledge, and enrichment. Hope you're all doing truly sensational. I was out of the town, out of the city, out of pocket for a few days. Here's kind of our journey. I took my nephew, niece, and my nephew's girlfriend, and Ashley and myself. We drove around in the California area last week. So we flew into Sacramento and then drove down to San Francisco, hung out in San Francisco, and then drove over and did all of this. I say do all of that. We went to Yosemite, which is in this general area right here, and then we went to Sequoia National Forest and really just did a lot of hiking, and then drove down to LA, dropped my nephew and niece off and his girlfriend in LA. They flew back. Ash and I went up to this area and I performed a wedding. First time I've ever officiated a wedding. It was for a good friend and a trader buddy of mine named Brian Bodie, who married in Montana. Shout outs to you two beautiful folks. Met some new folks there who are going to be new real life traders at some point soon. And yeah, went back to LA and then flew out of LA and got back late last night, and now I'm here. So that was last week, and then the week before then, really just kind of out of pocket entirely. So back, feels good to be back, and I'll be here pumping out stock reviews for about a good solid month. The next time I'll be away will be for the Thanksgiving holidays, but that's when everyone's away. Anyway, a lot of things to talk about, and I'll do my absolute best to sum it up in a good stock review for you today. Most likely you've heard that the markets were down. This is the Newsome travel indicator. Anytime I'm taking a break, very frequently, if I am totally just not trading and on vacation, the market plummets. So the most recent event was this, right? On vacation, traveling, and the market decides to just absolutely go bonkers. The really big warning signal, realistically, was these two, sorry, let me draw that a little bit better. These 2 days right here, and I'll kind of zoom in on both of those. Those 2 days were the formation of the double top, and then it really got squirrely when it took out the low of the candle from the 8th. So here's really what happened, right? You had that nice retest gap right here. We retested, beautiful bounce, new all-time highs. And as I've been saying for a while, when the market makes new all-time highs and breaks above that strong January high, that's when I was going to wait and really see what happens, because so many brand new traders were going to think that was the time to get in long. That was the time to get in bullish. So here's the previous all-time high breakout. Here's the retest. And then right when it makes that new high, that's when everyone hopped on. All of the newbies said this is the confirmation to get in bullish, and that's where they got in bullish. Now from there, you did have that secondary, a little bit of a bigger S-curve, so pull back, trade up higher. And then when that candle came in, because that was a gap down, right? That's the big takeaway, is this all started from a gap on October the 4th. So when that gap occurred, pretty bearish day in the market, and then the very next day, right, it continued, traded down to 286.59. That was the really strong support. So this blue line, again, is the previous all-time high. And then when this candle formed, really nice, strong, bullish candle there, you had 1, 2, 3 bearish candles in a row. You did have a bearish retest gap right here. So this little move, this function in red was, at least in my opinion, the retest of that retest gap. And really, once we gapped down on this day, which was Wednesday, and broke the low of that candle, that was it. That was some strong, strong bearish selling coming on the SPY. Now, at this particular juncture, what do we do now? Because all that's cool, but that's already happened. Today was an inside day candle on the SPY, meaning it's perfectly inside the range of the previous day. In fact, this is the second one. Last Friday was also an inside day candle. And I'm keeping an eye on SPY to bounce at this area. So here's the weekly 50 exponential moving average. We did trade down there before We have bounced off of the 50 EMA on the weekly chart before. Here's 1, 2, 3, 4, 5. This would be the 6th time getting to this area. I do think we have another low ahead of us, and just the question is, when does it come in and when does it form? Something like a double bottom. I don't know if it's going to be quite as big as the last one. October, usually a little bit more of a bearish month historically, and then the Santa rally could come in, at any particular point in time, November, December. But with this inside candle and all the moving averages, right, they've crossed, we're bearish, right, we're below all of them. We're now below the long-term moving averages. We closed below the 200 2 or 3 times, kind of testing it from the bottom. The question just realistically is, when do we go lower? And with this type of move here, I'm expecting a bounce a little bit higher and then a rotation lower and then a move like this. Just the question is, when does that low come in? And I wish I knew. We're going to have to wait, let the candles, let the market tell us when it starts forming that bottom. We do know that today's an inside day candle, so if it starts making lower lows and lower highs, we probably are going to make another little bit of a low. And then again, I'll be keeping an eye out for the bounce. Still planning on the salsa coming in, the dip coming in at some level. But before now and then, the volume of these 2 candles that came in on the SPY, right? So these 2 volume, that was some pretty strong bearish volume. And that was certainly a warning signal. And then the volume started declining on those 2 bullish days right there. And then obviously tons of volume coming in on the drop. So yeah, the volume is here. It certainly happened, and we are at some support. So here's the hourly time frame. And the hourly time frame, really the last hour of this market, got a little selly as it came into the 200 and tested it from the bottom. So yeah, I'm watching for some lows to come in. Something, again, if we have a little bit of a triangle pattern, we break down, trade down, back to this area. I'll be keeping an eye for some buy low, sell high opportunities. Not saying it's going to happen for sure, but that's what I'll be watching for. That's what I'm planning on, because we have put in a pretty strong low. And as it trades down into that area, I'll be just watching for some consolidation to occur. Because, yeah, we sold off. It was a big sell-off. It was quick. It was fierce. And as most sell-offs are, as you can see, the most recent one that we got, a lot of comparisons being put into these moves over here. And both of those moves did form that kind of like double bottom type of look before we bounced higher. And that's usually the situation and the formation that you get. It's that kind of like double bottom-esque pattern that just takes a few days and a lot of consolidation, a lot of gappiness. So the best thing I can say for anyone trading is be the trap. Try to be the person that sets the trap. Try to be buying where you think other people's stops are going to be, and selling where, same exact situation, selling where they're going to be entering. And just play it cool, play it thin. You don't have to trade at this particular juncture, but there's tons of things for sale. Nice opportunities out there to get into some good stocks at a cheap price. Cheap, relatively speaking, as in just a few weeks ago, it was much higher. So feel free to go look through some of those and find something that's moving a little bit differently than the broader markets. I did lose 2 R's on NIO today. So this was a trade that I liked because it was doing something a little different than the broader market. Had a decent gap, and I just played this one poorly too many times. Here is the 3-minute chart, and the first setup I really didn't mind. Here's the first setup, and the entry was here. So once it broke above, right, it formed the pennant pattern, it broke out. I wanted to pull back into the previous high of the day and then a bounce. And my stop was pretty low, but I guess, well, it wasn't too low, but it was right there. So entry was 8.14, I think. Stop was 7.92, and yeah, within like 6 minutes, got stopped out. So that's usually what I want, is if you're going to get stopped out, get stopped out kind of quickly. And then this trade that you see in front of you was the second setup, and that one also just did not work. That was me trying to get in bullish when this pattern occurred. Boom, boom. There was the S-curve, and you got that high wave candle, bearish candle, and then as that bearish candle formed, I set that 802 entry price by 772. Got entered and stopped out pretty much by pennies on both situations. So I guess a little rusty is what I'm getting at. But that trade, those trades did not work. And the unfortunate thing is Tilray was the second setup that I had. This one was how I would have played Tilray, and it would have worked out had I just taken Tilray and NIO. So this was the entry that I was planning on. Previous high of the day, 3 white candles in a row, and I was just looking to play that S-curve, and it would have filled, and on this candle right there, I would have increased the stop to there, and then an hour or so later, after these candles come in, I would have increased the stop to there, and then probably would have exited around here for a little bit more than an hour. So if I had taken Tilray, I would have won more than I lost, but I did not, because I'm a giant chicken. So those are really the updates for the day as far as day trading is concerned. I don't have tons of trades to update you on because really, again, the last 2 weeks kind of been out of it. And I do have some options expiring this Friday. The only ones that will expire profitably most likely is going to be 3D down here at $14. The rest will just be covered calls. So that's 3D will expire. HK had a covered call at $5. That'll expire worthless. Micron Technology had a covered call at 53. I got some protective puts on those, so the covered calls will expire worthless on MU this Friday. And Macy's had some puts on Macy's from a weekly options newsletter. This was the put set up as you can see it, and that one did hit the target. That just happened automatically as I was out. Trades was set up, everything was already there. The broker just kind of did its magic on that one. And then FireEye, F-E-Y-E. The setup that you see is the same setup that I got triggered into and then exited on this day right here for a quarter of an hour gain on FireEye. And then Shopify, got stopped out of a Shopify swing trade. Again, all this was just happening while I was away. So we got some Shopify setup that took this pennant pattern, and this was one of those beautiful examples of entry here, stop was there, and immediately triggered, immediately double topped, and this was really your, we're going lower candle on Shopify. So a lot of interesting moves out there. Netflix reporting earnings very soon, and I will be having a webinar probably later this week, if not this week, next week, about the Netflix subscription giveaways, because I did have a wager saying that Netflix would hit 300 before earnings, and I made that wager and it has not occurred. Did not happen. Got pretty close. It got to 310.93 and I made that wager back here, but it didn't happen. So I will be sending out some emails about that. Netflix gonna have earnings. Pretty interesting to see what happens on earnings. And my thoughts, realistically, is Netflix probably gaps down to the 280 to 300 region and then trades higher, fills the gap, and then rolls down to 250 and then starts bouncing longer term. That's kind of my worst case scenario for Netflix. Is that going to happen? I don't know. But if it does gap down, we'll see how it plays out. That's just kind of my thoughts. Otherwise, if it gaps up on earnings into this general area, like at 345, right above those 2 candles, this would probably be some type of channel that it's going to play out in for a while, because it is off the 200. It is bouncing. I do like it. It looks nice, and I expect them to have good earnings. Just how will the market react to those earnings will be the question. A lot of traders in some option sales on earnings over earnings. So my buddy George is in a 455, which is way up here, 275 naked strangle. Sounds weird. And yeah, that's pretty much it. Dean and a few others have some put sales at 300 for Netflix. So we'll have to see. Netflix earnings, big event for sure. I really do like this support, and I'm kind of guessing and thinking that they do gap down on earnings. We'll just have to see. It's a pure guess. I'm 50-50 with my earnings thoughts on most stocks. And you can see that 309.73 is the 50 EMA. So if we do gap down small, especially if we gap down to like 310 or something, I think that'd be a good spot to bounce off of. Yeah, so we'll see exactly what happens and transpires on Netflix. But that's going to be big news. Tons of traders getting in some positions now longer term on stocks like Square and Micron. Now they've had their pullbacks. A lot of people selling some puts. All I can say is just be patient. Love the pullback that we got in the markets while I was away. Some stocks are stronger than others. We do have an NIO option trade that we are in from the weekly options newsletter that Brad set up with everybody last week. My buddy Troy Beinhauer's in a covered call buying some shares. And yeah, it looks okay. I like the gap today. I mean, if NIO breaks above 839, it should continue higher, I would assume. So as long as you can find something that's doing things differently than the broader markets, those will likely be the best things to play, because the broader markets at this point will continue in whatever fashion they see fit, and that is the direction that you're going to want to play it out in. Just be cautious, be the trap, be nimble, be fast, find some profits, take them. Quick pullbacks, choppy year, been exciting, so much more to come. Ladies and gentlemen, I'll see you all on Wednesday. I look forward to your requests between now and then. And until then, love life, live life, and trade it back. Thanks so much for watching that stock review. I hope it helps you grow your account the exact same way that these giant, magnificent trees have grown. Slow and steady, but at the end have ended up massive.